Hey, and you're going.
We okay, Eric?
Yep, you're good to go.
Good. Good morning, everybody. I'd like to call the April 8th, 2021 regular meeting, virtual meeting versus Zoom of the Financial Advisory Commission to order. And looking at the screens, it looks like all commission members are present, along with Finance Director Dickinson, Alderman Arnett, Assistant Town Manager Lynn Farrow, Katie Connolly from Finance Department, and David Gerald, City Manager. So before we begin, anybody have any preliminary matters? If not, I sent out an agenda for you all to review. I think I sent it out on Sunday. Any comments, corrections, revisions about the agenda? Hearing none, I'll entertain a motion to approve the agenda as presented. Made by Bob Burden, seconded by Jim Cardillo. Discussion? Hearing none, all in favor signify by saying aye.
Aye.
Opposed? Okay, the minutes of our March 11th meeting will stand approved. We have a number of things from finance. Before we do that, I'll shift to audit committee. Jim, is there any update from the audit committee?
None noted. The last meeting of the audit committee was the 15th of March. We had a presentation from the Department of Human Resources Director. And this is Mr. Alderman Payon is the chair of the audit committee, and his process has been to introduce various city departments to the audit committee so the committee members understand the workings of city government. It's been very informative.
Okay, great. Thank you for the report. Any questions of Jim's report? Hearing none. I sent out the monthly boards and commission email update from Hillary. Jam-packed with information. Anybody have any questions about Hillary's report? Okay, thank you. Now let's go to Finance Department and Jody. And those of you who hold on a sec, Jim. Those of you who were not logged on yet, Jody sent us an email a little while ago, a few minutes ago, with some attachments that she's going to talk about presumably during her presentation, and they have to do with updated fund balance, expense, and revenue estimates as of dated today. So with that, let me turn it over to Jody. And there are 4 topics on the agenda, but you don't need to be constrained by those 4 topics. One is general operations, which I'd like you to address first, Jody, and then go to your updated projections. And that is those 3 files that you sent us a few minutes ago, I presume. And then if there's anything you and David can share about the FY22 budget, and then finally the Kafir, which was sent out along with the other meeting materials, I think on Sunday. So with that, a long-winded introduction, good morning, Jody, and I'll turn it over to you.
All right, so I'm trying to figure out how to get this to work, and I hope that this works when I share my screen. The first thing, you said general operations. I don't know what it is that refers to. I will say that we're very busy with the budget, and we've just finished the Kafir, and I have to get out a report to the county on how we've spent our CARES Act funding so far. But I want to take a minute, and I'm trying to get my meeting screen back to exit full screen, and I can't seem to do it. And I may need Eric's help with that.
Well, Jody, while you're trying to figure that out, any staffing issues?
So
Hires,
no,
losses?
no, I have hired an assistant finance director. And I don't have a starting date for him yet. So when he does come on board, I will introduce him to the FAC. He's ending another job, and the start dates were going to be either May or the end of June, because either in April or in the early part of June, I don't really have the time to train or onboard anybody because of the time involved with the budget process. So I offered some dates, and it may be as late as the end of June before he comes on board. So that's my biggest news.
Okay, thank you.
And
Congratulations.
yeah, the city staff is busy getting vaccinated. So hopefully with when the second round of vaccinations come, we'll be getting back to a regular schedule and have more people in the office. So I think things will be a little easier and a little more efficient when that happens.
Mhm. Okay, great. All right, I guess let's talk about the updated fund balance, revenue and expense estimates.
Mm-hmm. All right, so if I can, all right, this is what I sent one. See if I have them all. Okay, so what I've given you are can you see the screen? Oh no, how do I share my screen now? This is.
Down at the bottom, there should be the share screen option. Just when you float your cursor down, the button will appear.
So what does it look like?
Just when you're at the bottom, it should be just a little up arrow icon that shows share screen.
You have to move your cursor down to the bottom of
Yeah.
your screen, Jody, and then you'll see a little green.
Okay,
Just
I
then-
have
just
to open this up more because I cannot see the whole thing. I'm in a view that's not giving me that option.
Yeah, so sometimes you have to share the whole screen.
No, I'm in a
versus just
view.
sharing-
I'm in a view on the meeting. I have a view set, and I can't get the view exit full screen. I can't get that off full screen, so I cannot see the button that says share screen.
Oh, okay.
Oh.
Then just
How
up on the
how
top
about-
upper right, you should be able to change your view.
I know, but I can't. It's blue, and it won't
How
let me
about
do
it?
it.
How about escape?
Yeah, that's good. Yes, right. That's what I was about to say.
Escape. Escape. Where's that?
That should be
In the
your
upper left-hand corner of your
Of your keyboard.
laptop.
Well, Jody, if you can send
On
the
your keyboard.
documentation, if you send the documentation to someone else, we might be able to share it from the screen for you.
Yeah, you want to email it to me and then I can share it.
Well, you all have it
okay.
because she sent it about 10,
Just
15
now.
minutes ago.
Yeah, that's true.
So, Jody, what would you like somebody to share? Which one first?
I would. Eric, can you tell me how to get off full screen?
You should be able to. Probably the best way is just in the upper right corner. Just close the window if you can.
It's not letting me. There's no close button either.
By the view, it's not. That's
Okay.
not letting you highlight.
Okay, it's over here. Okay, it's over on my other screen. That's what the problem is. So,
Okay.
but I can't move it off my other screen. That's the problem. Okay, I'm going to close. Exit full screen. There, this is better. Woo! Now I can
There.
see it the way I'm used to.
There
Thank
go.
you. All right. This is still, I can still see the speaker thing. So I'm going to share my screen. I'm going to get back to, now I can't see anything else. All right. What are you seeing right now?
Who?
You, anything?
Yeah, I'm saying a gallery view of all of you.
Okay, now I can't get back to my email stuff. Okay, wait. Somehow my whole thing moved over to my other screen. That's what it is. All right. Just give me a minute. Okay. All right. So can you see the expenditure projections?
No, can't see anything. I see you.
Oh my God.
Okay.
Lynn, I was just about to click a button.
Oh, okay. All right.
All right,
try
never
it.
mind,
I'll-
never
I'll
mind, never
end-
mind, never mind, never mind. We'll stay here. Here's the, I don't want the fund balance. I would like
What do you
the
want?
revenues.
What do you
Revenues.
want?
Revenues.
Okay. All right. Hang on a second. Okay. You got it now?
Yeah, so this
Okay.
is the revenue, updated revenue projections. And usually when I show you this presentation, I have an FY22 column over at the right. And I took that off intentionally because this has now been updated to reflect what we're going to propose in the mayor's budget on Monday. So I didn't want to make that widely available at this time. So I've given you the 1920, the 21 budget and the projected numbers. And if you'll go down to the bottom, Lynn.
Is that
No,
good?
that's not all the way to the bottom.
Oh, all the way to the bottom. Okay.
Just to give an overview. Okay, general fund, I'm sorry. General fund total. Okay, so you see there the total general fund revenue line. We have, we're projecting 80 million in FY21. We had budgeted 82.7, as you know. We had to cut back in the budget revenues during the year. And those show you the expectations for 21. The notable increases, can you scroll up to the first page, please? We have, there's nothing really spectacular about variations here. We're getting some good turnout on the licenses. We've talked about these before and other things. The interest income is way down. But our income taxes and our intergovernmental taxes have remained pretty steady. So we have the $80 million. I don't know if anybody has any questions on revenue yet, but we can move over to the expense screen.
Just one question.
Mm-hmm.
Jody, this is Bob Burton.
Yep.
Just taking a look under interest, rent, and other, and I see where you have interest, dividends, and other. We adopted $1,017,000, and we're only projecting 116.5. Why the delta there? Is there something? Could you just sort of help us understand that?
Hold on just a second. Okay, is it back up yet? All right, I'm going to put it up on my own screen so I can look at what you're referring to. So your question was on interest. What's the problem with the interest income number? When we first set the,
Yeah.
go ahead. Yeah,
No.
so that took a big hit this year. At the beginning of this crisis, which was in April, we had already set the budget. We anticipated interest at a level as we had before, which was the $1 million level. And then when the crisis hit, they lowered interest rates. And we have most of our investments in money markets, and those went to about 1/10 of the earnings that we had previously. And so we had to adjust those downward, which we did a little bit during the budget process, but later in the summer, it became evident that it was far lower than what we had anticipated. And that was one of the biggest revenue hits we took this year, was interest.
Okie doke. Thank you, Jody.
All right, so Lynn, can you share the expense screen? Lynn?
Yeah, I muted myself, but I'm coming. It's coming
Okay.
up.
No, computer's having all
where is
kinds of issues.
Hang on a second.
Jim, I see you have your hand up. Is that for a question?
Yes, thank you. Just a question on the headers and the statement title. Is it FY19 through 22 or is it 19 through 21? Because I'm not seeing an FY22 column on what I'm looking at.
Yeah, so what I said was I typically have that 22 column on this spreadsheet. And when I did your PDF this morning, I took off the 22 column
Okay,
because it's the equivalent of what we have right now for the mayor's proposed budget for 22.
okay,
And
thanks.
it's not official yet. So I took that column off.
Okay, sorry.
So I intentionally did that. When you're right, we usually have 22 on there, which
All
is
right, thank
pretty
you.
helpful. Lynn, are you able to share your screen?
Yeah, I got it.
Oh, okay.
It was just named revenue, not expenditure. So I kept thinking I was opening the wrong file. Sorry.
Okay, so what you have here is our projections for 21. If you remember the revenues, $80 million on the other projection. If you'll go down to the bottom of the general fund totals, Lynn, 80,295,000. So we've got expenditures in line with the revenue estimates. And these departments have done really well with curbing their expenses and keeping positions vacant as much as possible so that we could make our revised spending levels. I don't know if anybody has any specific questions with the expense side. We can go to the fund balance screen.
Good.
All right, so Lynn, will you put the fund balance one up? That kind of brings it all together. That's the one that I like to.
Yes, I will. I'm getting it now.
Okay.
All right.
All right. So in this one, I did leave the 22 on there so you can see that as projected, we believe 21 will end up with fund balance in the general fund of $28.2 million. But some of that is going to be the reserve funding. And we'll have in our unreserved piece, the $17.2 million, the line at the top. That is a little over what we are required to keep. We have a 15% requirement that we have to keep in fund balance. And so I've added a column to this presentation that shows you meet the transfer of those excess amounts down into the reserves. According to our policy, we have to put half of our excess into the budget stabilization fund up until the cap, but it's already at its cap. And so we will split the excess reserve, the excess fund balance into our capital reserve and into our reserve for one-time uses. So I've shown that here. It's helpful to see that drop down onto the lines. And then as we go into 22, the budget is balanced for the 22 budget. And you can see where we have been able to maintain our reserve levels there. So I will entertain any questions.
Okay, if no questions, thank you for those
I'll
updates,
ask
Jody.
if the city manager, Gerald, if he wanted to share anything about our results. The 22 budget does utilize some of the $6.6 million of ARPA funds, the American Recovery Plan monies we're expecting to get. We're expecting to get about half of that very soon, and some of that will be used in the 22 budget. But it also means that we still face, going into 23, some structural deficit issues. So we're trying to save some of that ARPA money into 23 as well. But we'll give more specifics on that next week when we deliver the mayor's budget.
Okay, any questions of Jody on that? Okay, thank you, Jody. Move on.
All right, so.
Okay, so next, is there anything you or David want to share about the FY22 budget other than this in its final stages of preparation, and it'll be released when, later today or tomorrow?
Go
Monday.
ahead, David.
Monday. We're going to submit it Monday to the city councils. So at a high level, and again, Jody sort of summarized it, but we're going to submit a balanced budget as we have to. FY21, the departments did a great job in managing costs, and we delayed a lot of filling vacancies through the year to help with that effort. But as a result, expenses are about the same as revenue. So I think it's a good outcome for FY21. We do have a structural deficit in FY22, at least partly, and maybe mostly, because of continued impact on revenues due to COVID. So that structural deficit will be covered with some of the $6.6 million that we're getting from the federal government for the American Rescue Plan. The good news is we don't need all of that funding to cover the FY22 projected deficit. So some of it will carry over if there's still revenue impacts in FY23. You remember at the last meeting, we talked a lot about kicking the can down the road in FY22 because of the federal money, and FY23 being the difficult year. Our expectation is that revenues will recover during FY22 and be back to normal in FY23, and we'll still have some money available from ARPA to cover any lingering deficit at that time. So we're pretty positive about the budget picture right now, mostly because that federal money is helping us through these COVID impacts that we've had and we're continuing to have. But with the anticipation by FY23 revenue will be close to being back to where it normally was or where it was before COVID. So if you have any questions, happy to answer those. Or Jody, if you want to add anything, feel free.
No, I think that sums it up. I mean, I think the way we are planning to use the ARPA monies will smooth our transition back into a more normal revenue flow. And by this time next year, we'll be doing new union negotiations. So we'll have to make sure that our compensation packages fit into our revenue expectations for FY23.
I can tell you that we took fairly big vacancy savings as part of the FY21 budget. The police vacancy savings was upwards of $800,000. We're continuing all those into FY22. So none of those were restored. Those will continue. So we're going to have to still closely manage filling vacancies throughout FY23, and I suspect probably into FY23 as well.
All right, I'm going to try this screen sharing thing again. There we go. Because this is what I'm going to talk about next. So hopefully I did this right, and you can see the comprehensive annual financial report.
Yeah, Jody, before you go there, did any commission members have any questions about the brief presentation on the FY22 budget?
Yeah, Fred, I just have one question. Bob Burton. Yeah. David, in the last FAC meeting, we did talk about the labor negotiations reopening up again, or actually starting to negotiate the new contracts. But you do mention that this year we did reopen some discussions on the current contract. Could you give us a status update on that, please?
Sure. Yeah. So we concluded those because we got the $6.6 million of federal assistance. At least for the mayor's budget to be balanced, we don't need to take advantage of any of those things that we talked with the unions about. So I guess that's sort of a good news, bad news story, right? Good news for the employees that they're still getting everything that was agreed to 4 years ago on the compensation side. Bad news that we're continuing with a high growth in the personnel cost numbers based on those agreements from 4 years ago. We're going to negotiate again next year because this will be the FY22 will be the last year of that 4-year agreement. So as Jody mentioned, we'll be renegotiating a labor agreement. I don't anticipate at this time that it'll be 4 years again. That just is too long to really be able to project what's going to happen with the budget. So I would expect that it'll be a shorter term than that, but we will be renegotiating the agreement next year for FY23.
Okay, thank you, David.
Okay, sorry for the interruption, Jody, but thank you, Bob, for the question. Go ahead, Jody. Let's talk about the Kafir.
Yeah, so as you know, that this was late getting out this year, mostly because of all the extra work we've had to do regarding the pandemic and the budget estimates and the CARES reporting. And we just finished putting this out on March 31st. I sent the document out to everybody, and you're probably going to want to take some time to look at it. It's 9 months old, so year-end June 30, 2020. But I think it paints a good picture of 2020, even though the last quarter of the year was difficult. The document has a lot of sections in it. The introductory section has a transmittal letter written by me, just some basic information about the city and what we've been through, some discussion on what we've been through this year with the pandemic. We have our GFOA certificate from our June 3019 report, an org chart and the principal officials. The financial section is where you'll find most of the information you're going to want to see. The basic financial statements have the government-wide statements, which fold the government activities into two columns, governmental activities and business type activities. And the business type activities are basically your enterprise funds. The fund level financial statements is what I typically go to a lot because that's the way we budget. That's the way we track our expenses. So I'm going to take you back to page 26 and 28 here. Before you hit these statements, there's a section called the MD&A. If you want to get a basic overview of the financial performance of the city for the year, I would suggest this is what you read. The comprehensive annual financial report requires to have this here to talk about the variances, the growth or the decline in your fund balances, what caused them. That's essential. They want that in there, what actually caused the changes. So it has various sections and it's very useful to get an overview of the activities. So back here in the fund financial statement section, we have our governmental funds balance sheet, which you see the three columns here: general fund, the capital projects fund, and then this column that has all of our non-major governmental funds combined. And this column has a breakout later in the document if you want to see the details in the funds that make up those numbers. The general fund balance, as you see, is $29 million. We have our unassigned 15% number here that we're required to keep. And this is the balance that was in our one-time use reserve. And then our budget stabilization fund and our capital reserve fund are here and here. And these right here, these numbers right here just represent the encumbrances that were outstanding at year end. We don't show those as expenses, but we do show them as an earmark of fund balances so that we know those have been committed to vendors for certain things. So this next statement here, the revenues and expenses, I wanted to show you that in the general fund, the city increased the general fund balance by $4 million. That was two things. That was revenues in greater than what we had anticipated, and expenditures, savings and expenditures from both regular operational savings and then the savings that we got in the last quarter of the year when we shut down a lot of the city operations. And then down here in this section, you'll see some of the non-operational type things like proceeds from our debt issue and refunding of some of our debt, and transfers are down here in this section here. After this, you will see the proprietary fund statements, and that includes all of the enterprise activities, our sewer, water, parking, transportation, and our two non-major funds, which are watershed restoration fund and the refuse fund, are in this column here. And again, anytime you see a column here in this front section that's a total, you'll have a breakout later in the comprehensive annual financial report that shows you what makes up that total. Over here to the right, you see the internal service funds, which are the funds that serve the city itself: health insurance, self-insurance, fleet operations, and fleet replacement are all here, accounted for here. And again, there is a breakout of those detail activities later in the report. To highlight here, I like to start here with the revenue side of this presentation. You'll see that the changes in the net position overall, positive for the most part. We had loss. I believe this, I have to look back at the detail to see this. I think this might have come from the refuse fund. So every fund here built its net assets from the prior year. We still have a deficit in the transportation fund. And when you look at the transportation fund, you will notice that it did not get the anticipated subsidy from the parking fund. We had to cut back somewhat on that because the parking revenues were strained in the last quarter and the parking fund was not able to send its complete subsidy. So that's one of the reasons why we still have a $2 million deficit there. And also the transportation fund has a payable, the cash balances, as you see here on all these funds, are up here. But on the transportation and the parking fund, their operational situation is in a deficit position, meaning they've borrowed cash from the general fund to pay bills. And those are your numbers right there. Those negative cash balances show down here as a liability. And the transportation fund always has this negative balance. And one of the main reasons is they depend on grants. Grants are reimbursed after the fact. And at that point, at June 20, we were waiting on a reimbursement from the CARES grant that they got. That $720,000 was anticipated from that grant. In addition, we would have been waiting for 2 quarters worth of their normal operating grants from the state. So that's what makes up that negative cash balance. They have to spend the money and then get reimbursed from the grants. And at least half of their budget is funded by grants. So that's a substantial amount, and that always has a negative cash position. We've been trying to lower that negative cash over the last few years, and we were successful up till FY20, and the negative cash balance actually went up slightly. But that's because the parking fund was not able to send over the subsidy that we had anticipated. I don't know if anybody has any questions on any of this. It probably would take a little time to kind of peruse the document to come up with questions that you had on the activities.
Any FAC members have any questions for Jody?
Mr. Burden has asked about cash flows. The proprietary funds have cash flow statements, which you see back here. In this statement, you can analyze that and see where the cash sources of the cash and the uses of the cash comes in. And then back here, we have our fiduciary funds. This is a combined column that has both our pension trust for police and fire and our OPEB fund. And again, there's a breakout of this detail in the back that show the two separate activities. And this shows you the additions and the deductions there. One notable thing here is the last quarter of FY20 took a big hit in the investment market. And you'll see that overall, we had a fair value adjustment downward of 985 for the year. However, that loss turned around shortly into the beginning of fiscal 21. So we're no longer in that loss position. And just to show you that when you're looking at the financial statements, there's a lot of notes to the financial statements that follow this that give you breakdowns of what's in cash, what kind of balances are there, what kind of investments are on our balance sheet. It gives you a breakdown of our capital assets and our depreciation and our debt and the details of our debt and it rolls forward your debt to show you our bond issues and what we issued new and what we paid off. There's all kinds of information in the notes that you can look at to get some details on some of these elements that are on the financial statements. So I encourage you to peruse those. The later parts of the document, like I said, are if you get past the notes and the required supplementary information, there's some general fund budgetary presentations in the back that give you budget to actual. There's a general fund budgetary basis summary here. And then when you get into the back, you'll see a lot of combining statements. Like here's a more detailed budget statement. There's budgetary comparisons for every fund that has a budget is in here, except for grants. We're still having a hard time coming up with a presentation for grants that's helpful. Then here's what I said on the combining balance sheet for the non-major governmental funds. This total column right here is what ties to the front non-major column. So this is your breakdown, and you can get a lot of details of these funds back here. All right, I'll stop there.
Okay, thank you, Jody.
It's very long and it's very involved, and it takes quite an effort to get it pulled together because there's so many pieces that tie to each other. So it is quite an effort, and my staff is instrumental, especially Peju. She's helps me pull this together at the end. All the staff had a role in pulling these financial statements together, so it was quite an effort.
Congratulations to you and your staff. Comprehensive undertaking.
Yes.
And thanks for the report. And I realize that we've only had it for a little bit of time, and there's only so much in a meeting like this you can go over, but I do appreciate you highlighting some of the important points. Any questions of Jody? Okay, seeing none. Jody, you got off easy. Thanks.
Yeah.
Okay.
I think I put everybody to sleep.
Well, we're trying to follow along with you a little bit.
It is hard. It's a lot of information to take in.
Yeah. Let's move on in the agenda. David, anything new on the Resiliency Authority status, legislation status?
Yeah, I think we mentioned at the last meeting that the county's law office had drafted the proposed legislation to implement the Resilience Financing Authority in the county. So our law office is modifying that to fit the city's structure. And so as soon as that is available, we'll certainly provide that to you all to review, and we'll also be reviewing it with the council members, and then be introducing it. Hopefully in early May, at the first meeting in May, we'll be able to introduce that to get that moving forward.
So you're going to have enough time to finish pulling it all together, having review by whoever's going to review it, and then still try and get it introduced beginning of May with the budget and everything else?
That's the anticipation, yeah. So we've reviewed closely the county's version before they finalized it. So we provide a lot of comments to them on their legislation. And so now we're just adapting it, as I said, to our code. And yeah, that's what we hope to do. So we're going to, once it comes out of the law office, then we'll move quickly to get allow everybody to review and provide comments and then introduce it.
Okay. Doesn't leave a lot of time for comments, but
well, Fred, it'll still go through the whole legislative process, which
right,
is the normal time that comments are provided, but we certainly would welcome comments in advance of introducing it as well.
That's fine. I appreciate that, David. Sorry for the little testing remark. And I understand that hopefully, once it's introduced into the process, we'll get a formal referral. They'll give us a little bit more time to, look at it and make any constructive comments that we think are appropriate. So, so thank you. I know you all been working hard on that. David, thank you for forwarding along the letter from the mayor and from Alderman Arnett regarding the spending affordability subcommittee report. And Bob, I've forwarded that to all the committee members. Bob, I think you got back to me yesterday or so and said, thanks, nice letter, good letter, and that you and Ed will begin moving from here. Do you have any idea, what your next step, your and Ed's next step will be in the process?
First, I think that both Ed and I just need to reconnect on this and sort of put together a timeline here. And then at some point, I think we're going to want to get together with David and with Jody, before we do any outreach. I think the other question in putting together the timeline is that, looking at the dynamics of this year, I think this is an election year in the city. Is that correct, David? So
I think it might be. Yeah, that's the rumor that it might be.
Okay, so from a legislative perspective, I mean, the timing of our recommendation back to the city council and the city council's ability and desire to want to take action on it, prior to the end of this year, so that if they do adopt a spending affordability function, it would be available to them for the FY23 budget. I guess I'd look to Ross Arnett on that, as well as David, as to whether you feel that if we set an appropriate timeline and there is a desire among the city council to move forward on this, would they be able to perform the necessary legislative responsibilities to get this in place?
If you're asking for a response from me, I'm not even really sure what legislation it would require. I was hoping that we would get a model that is essentially a step down from the state to the county to the city, and it's a model. It would be a tool, just like any other tool that I would hope we would use. Certainly, it's not so much the council using it as the administration using it. I would certainly hope it would be helpful to Jody and her staff and the city manager. The council would look at it as for what information it would tell us about analyzing future budgets. And as I think you got the quick overview from Director Dickinson, it does look like fiscal 23 is now the new focus with all of the ARPA money and things like that. I think 22 is not going to be nearly as uncomfortable as we thought it would be, but that in 23, we won't have all of that deluge of external one-time only funding. So our structural deficit will be fully upon us at that point with no outside help. And so getting the tool is what I'm interested in. And I'm not sure really what your committee is going to do. Is your committee just going to say, this is what it would be? And if you want to get it to the city level, here's what you would have to do and where you would go to get that done? Or just, I'm not sure exactly what concept you have in your mind for the tool.
Well, Ross, in putting together the initial report that we gave to the city council, we did review the spending affordability function on the county level and the state level. And some of that function is codified in both county law and state law. So that was, that was the reason for my question, is that if the city does decide to adopt a spending affordability function, and if in fact, that function on the county and state level is in some part codified, within their codes, would the city council and the administration recognize that for this spending affordability function to have any real meaning and import, it may require or it may ask of the city council to include parts of it in either some form of resolution or within the city code to the extent necessary, as exhibited by how the county and the state manage their spending affordability functions. That was the basis of my question.
So I'm thinking of it much more as an analyst, I guess. I would think that one of the activities that would probably be required is that we would need to have some external expertise. Dr. Cater, who used to be on the FAC, would have been a good person to help us with that, but there'll have to be some step downs from the county level through attributions. Hard data, there'll be some hard data, but most of it will be attributions. And I'm not even sure until we do that how viable we'll know how viable the tool is. So it seems to me like we want to look at it and we want to compare it to some other sources like the fiscal impact work that's being done as a part of the comprehensive plan. And I think every one of these things are a piece of the puzzle. I would first and foremost hope that it would be useful to the finance department and the city manager. But until we actually see the tool, I'm not sure. And I think that would require some expenditure of funds from some outside consulting help. I'm not sure what we would do with it. I mean, if it's so full of attributions, I did this. We did the national health accounts and we stepped it down to the state level. And that was a heroic effort. It turned out to be quite useful and it did show meaningful differences. And I would assume when we step down from the county to the city level, for example, before Jody was here, Melissa Siemens did a comparison of living in the same house in the city versus the same house in the county, which was the median price of house, which at that time I think was like $542,000. What is the difference in cost in terms of taxes and fees to live in the city versus living in the county? and that difference was almost $1,500. Those kinds of comparisons are useful comparisons, but they only give you part of the picture. The spending affordability tells us in a more definitive way how much more can we keep raising property taxes before we start to have some dire consequences. But what are dire consequences? Dire consequences are people start moving away. And then what does that do to the tax base? Well, maybe housing prices fall. So that's the kind of notional stuff that I'm hoping we will be able to get into. But I look forward to your preliminary committee work, and then we'll see what your advice is in terms of us pursuing fleshing out this model at the city level.
Okay, well, the concept of a spending affordability function, Ross, as much as it being a tool for the administration and a resource of factual data, it's also designed to be part of, or to provide and be an important tool for our elected officials on the council, the city council. I mean, if this spending affordability function is adopted similar to what the county and the state do, it could provide a lot of very important data and insight as to the capability of the city's tax base to be able to support, the expenditures that are anticipated. And if, there is some question concerning the ability of the tax base to do that, then there are some both financial and political decisions that are going to have to be made by those elected officials. And without saying, these spending affordability functions on the county and state level, do have a level of accountability, that's out there in the public domain, because these are, they are made available to the general public. So, these are some of the, just going over previously how the county and the state approach this function. I anticipate that, as we start working through this, we're going to see certainly some definite value there. But along with that value is going to come, a level of, there's going to be a level of accountability and a level of more thorough understanding to what the city's tax base is capable of supporting and not supporting. And then that leads to the financial and political decisions that the city council has to make from year to year going forward. And I think, Ross, this is what you've asked for all along in the many years that the FAC has been working with you and members of the city council and previous administrations. So that's what we hope to deliver.
And that's what I'm looking forward to. I think we're saying the same thing, maybe at a slightly different level, but I agree, we need it. It is an accountability tool. It will hold the council accountable because it'll have to be a transparent tool, which means our constituents will know what the tool says. And they will be able to use that information to help shape our votes. So ultimately, yes, that's what it's all about. What will the budget look like if we have a shortfall? Do we cut services or do we raise taxes again? And yeah, that's exactly what I'm looking for.
Okay. Thank you, Ross. Appreciate it.
Thank you, Bob. Okay, let's move on. Next item is Open Meetings Act training. I know some of you have already taken the training. Some will be taking it. Just reminder, when you've completed the training, please send your certificates, email them to Hillary Raftovich so she can keep them on file. I know, Bob, you said you will be taking it shortly. Jim, I think you said you also will be taking it shortly. Has anybody actually taken it yet? Frank? Okay. Thank you. So have you provided your certificate to Hillary, or are you need to?
Yeah, I found your email from March 11th, so I have her address, and after the conclusion of my training session, I'll send it to her.
Okay, great. All right. Any comments on that?
It was pretty straightforward. It's the training wasn't that difficult, just time consuming, but eye opening to a lot of things.
Yeah, good. All right, listen, I hope the rest of you, whoever takes it, find it worthwhile. Frank, I know you have to leave in a minute, so just reminder, our next regular meeting, our special meeting tentatively is April 22nd. Next regular meeting is May 13th. Next week on the 15th, Thursday afternoon, is City Council budget work session, to which we as a FAC are all invited. Ross, Jody, anybody, will we get a link to that, or how do we log in if we want to participate or observe?
Yeah, we can send you a link if you would like to participate. If you just want to view it, then you can do that on Facebook as well.
Assuming you're a
it's your
Facebook
choice. If you
user.
want to participate, then let me know and we will send you a link.
Okay, since I'm not a Facebook person, why don't you send, probably one of the few people in the world who are not a Facebook person. If you can send me a link, I'd appreciate it.
Myself as well. I am not a Facebook person. I would love to have the link.
Okay. Fred, can we just have the link sent to all
Yeah,
the
we'll just
faculty?
send it to everybody.
Yeah.
Thank you.
Okay.
Yep. Mm-hmm.
You took the words out of my mouth. Thank you, David. Appreciate it. Okay, we had one other item. It was just a carryover, pension and retirement benefits, and a presentation on that. I think, David, if I recall correctly, you had requested that we defer on that pending union negotiations. And I think at the last meeting, Faye had indicated that a lot of this comparative information with other jurisdictions has already been compiled. So I'm just going to keep that on the agenda, and one day, it will be appropriate for us to get a presentation on that. David, I'll kind of leave it to you to determine what will be the appropriate time that will not interfere with the city's positions and workings on union negotiations.
Okay, thank you.
Sure. Anything else?
Hey, Fred, just one thing on that. Sorry, Ed, me, just
Yes, Ed. Sorry.
the comparative. Sure. Yeah, the comparative information that's been compiled. Is it in a state that it could be shared with the commission?
I don't know
Just
what
so
it is.
we could see that.
Yeah, Faye, you're the one who mentioned it. What do you know about it?
In the 4-year council compensation commission that I just recently was on, it was provided to us for us to determine if salaries or compensation should be recommended to be changed. So it was provided to us, but it was just in a Excel spreadsheet.
Okay.
Various jurisdictions that were comparable to Annapolis. So,
Okay. And who provided that? Not necessarily by name, but was it somebody?
Shoot you that in the email, because
Okay.
it was to advise us, and it may just be that compensation commission had to attain that information because we requested it. And this is the third time I've served on that commission, and it's been provided each time. So our liaison to that commission, which I'm sure Hillary will know who that was able to provide us the city liaison.
Okay.
Fred, I think that was the HR director.
Yeah.
Okay. Would it be possible for somebody at some point in time to check that out, David, Jody, or somebody else, and see if it's something exists in a format that you can just forward to the FAC?
So I will add, it was the HR manager. She has a schedule of comparative plans, which we've done a couple things towards your efforts. One, she provided this list to us, and we talked about that. We had some preliminary discussions with our actuary as to what they can provide. But we haven't set the actuary on a task of doing research for us because that's a cost. So we want to make sure we know what we have in hand already, which is what Tricia's list provides. We just haven't had a chance to dig into it yet.
Okay, thank you, Jody. So I would ask on behalf of the commission that, somebody just take a look at what information is out there that Faye referred to, that Jody referred to, that you all might be able to provide to the fact, just so we can, see what information others are relying upon or reviewing. And then, that may help answer some of the questions that were presented, and it may help us decide what additional information we might want or need at some point. Yes, Bob.
The fact in the past, I think, has participated with at least the Finance Committee of the City Council, if my memory is correct, receiving a presentation from the advisors that the city contracts with, that oversees pension and retirement funds and their investments and so forth. Will we be getting such a joint presentation at some point later this year, or?
Are you referring to police and fire pension? What? So the debt affordability, the financial advisors help us with our debt affordability.
Yeah.
And that will be provided at the work session that comes right up Thursday of next week. And then at your next meeting, we'll be talking about that debt affordability analysis. If I don't know what kind of presentation you would be getting from advisors on the pension side. The only one we would have is our police and fire pension actuary.
Okay, well, I think at some point, again, I'm relying on my memory, that we did receive some presentations in the past on that. I think our primary concern is the percentage of funding for these different, for the pension funds and so forth, how we sit in terms of, getting close to that 100% mark, if you will. But
that could have been an actuarial presentation. That was probably the actuary, and that's for the police and fire pension only.
Okay, very good. I understand.
Ross?
Yeah, so I think just as the FAC would like to see the comparative data, it'd be good for the Finance Committee to get that. And also, and Jody, I apologize if I have it, but I think I keep asking to get the last actuarial report and I cannot find it. So can you send that to me as well? That probably is going to be more topical for fiscal 23 when we are also in union negotiations, but it is clearly the case that our actuarially determined contribution to the pension plan has been growing pretty astronomically and is a good chunk of total compensation in the city now. So it'd be good to look at those two reports, and I certainly would hope the FAC would look at it too, because we look to you for advice.
All right, thank you, Ross. Anything else for the good of the order today? Again, I would encourage the FAC members to participate, or at least to log in to the City Council budget work session next week, because that will probably be a much more comprehensive presentation of the budget and related matters that we will receive at our short meetings that we have, even a special meeting. So those of you who can attend, I would encourage it. Anything else? Yes, Jim.
Point of order for either you or for Kim. Did we approve the minutes from the last meeting early on? I think agenda.
Well, I thought we did, but
I know we approved the agenda, but I don't recall approving the minutes.
Well, Jim, thank you for bringing that up. It certainly was on the agenda.
I'll ask Kim, did we?
No, Jim, I think you're right. Now that I'm thinking about it, trying to go back to the beginning of the meeting. So I did send the minutes out as a follow-up to my initial email with meeting materials. And I hope you all had an opportunity to review them. These are the minutes of the March 11th, 2021 meeting. Any review, comments, revisions, or corrections to those minutes? Hearing none, entertain a motion to approve the minutes of March 11, 2021 meeting. Motion made by Jim Cardillo, seconded by Fay Curry. Any discussion? Hearing none, all in favor of approving the minutes, signify by saying aye.
Aye.
Unanimous. Opposed? None. Okay, thank you. The minutes of March 11th are approved. Again, one last time, anything else for the good of the order? And thank you for being on the ball when I wasn't, Jim. If not, one last motion to adjourn, so to speak.
So move.
Second,
Motion made by Bob, seconded by Jim. All in favor?
Aye.
Everybody opposed? Nope. Great. We all want to go back to our daily lives. So
Thank you.
listen, everybody be healthy and safe. David and Jody, good luck on the end of your executive side preparation of the budget. Look forward to seeing it, and look forward to the work session next week and the special meeting probably on the 22nd of April. So everybody have a great day. We are adjourned at 9:07 a.m.